So I've been told many times so far that it looks like I live in my mom's attic over here. And that is absolutely 100% true. So to kind of kick off the spirit of that excitement of living with your parents in their attic and how joyful that is, let's start a lives in mom's house gang hashtag branded. That's the new gang of the channel. All right, guys. So because I am actually living in the attic of my mom's house and not the basement, that gives me much more say in and knowledge than everyone else who lives in their mom's basement and also just lives in their own house, because I'm actually living in the absolute highest point over everyone else. And because I'm higher up than everyone else, that gives me much more power and assertiveness and dominance over your opinions. So listen up. You're about to learn something very, very smart. Today we're looking at a small account growth strategy. What are we? We're trying to grow a small account as quickly as possible. Let's do it. So as many of you guys already know, I am growing a massive account. I am growing a $100,000 account currently right now. It started beginning of September, going very well so far, making some good money on the first 2 episodes there, about 10% actually. So please check that out in the wherever on the side, and you can watch to see how I'm actually trading a big account, a little bit safer than normal. But I wanted to come across at you guys with a small account so that you guys can learn how you would probably go about it. And I just wanted to make a couple adjustments to maybe my own trading strategy, something that would be more useful for somebody who is just really trying to. I know the emotional side's there for you guys. You're really trying to push it as quick as possible and grow that account as quick as possible, even though I said don't do it. Don't try to grow your account that quickly. You're going to lose, but we want to adapt here. We want to make sure that you guys are doing the terrible dopamine addiction things that you need to fix your mind. Anyways, there's going to be small adjustments on little bits of my strategy that's going to be a little bit better for you guys to grow your small account. And then, so if you guys do want to subscribe, I will be using this strategy in the new year to grow a small account after I'm done this big 100K flip account challenge to see how big I can get that one. Because I only want to do one at a time, guys. Come on, I'm not Mamba FX here. He can do 2 challenges at once. Shout out to Mamba. That guy's a freaking beast. I don't know how he does 2 at once. That's crazy. All right, enough about other people's channel. Let's talk about me. This is my channel. Let's talk about me. The strategy that I really needed to dive into here is going to be focused on getting you as many trades as possible and trading in high volume times. So the London and the New York session, you're going to be able to trade as much as possible. With my personal strategy, I'm basically only trading on the New York Open, so we're going to try to adapt it to be much more versatile so that you can use it at any point during the day, except for the Asia session, because that is just a huge old waste of time. And it's going to be much more fast-paced. It's going to be a scalping-ish strategy. So you're not going to be holding things for very long. You're hopefully going to be holding things briefly, and then you're getting in and out as quick as possible. You're trying to flip for a good risk reward, and that's all it is. It's going to be maybe 2 to 3 hour trades, and you're going to get in and out, and you're going to go to the next trade, and then each and every day you're going to be able to look for the next setups, and hopefully you can go from there. Now, the thing I wanted to focus on is we're only going to be using the New York, the US dollar pairs, just because it's going to be a little bit easier for you guys to track, because I'm assuming it's going to be mostly beginners using a strategy with a small account. We don't want to kind of cloud ourselves with these cross pairs and these smaller pairs that don't have as much authority over the market. So we're only going to look at these US dollar pairs. If you don't see a setup, you don't trade for the day. Listen to me. Let's do it. All right, guys, I'm going to try to break this down as simple as freaking possible. Number one, we're going to start on the higher time frame. We're going to look at the 1 hour. The 1 hour is going to be a well-balanced area where we can look at the overall bigger trend of the week and of the day, so that you can kind of know what trend you're going to be following. Now, you're going to follow the trend no matter what, unless you see something very, very simple going on like this. So we see a downtrend here, and we see a significant low being made, right? And then we're coming back, we're pulling back, we're showing weakness in the market, right? We're really pulling back to these previous areas that brought us down there, right? And that's kind of the thing that's showing us weakness. So we're kind of consolidating. We're not just coming back halfway and then continuing back down, if you know what I mean. So if this one's continuing up, we see a low here, come back halfway and then continuing up. We're not showing any weakness in that movement right there, right? So that makes sense to you guys, hopefully. And now here, we're showing a lot of weakness in that area, right? So now what we're seeing is we're seeing a move past that level and then it's reversing back in. This is going to be the only case, and I'm just going to try to make it very simple. We're not going to go into huge technicals around this, and we're not going to dive into massive explanations of the logic behind my strategy in depth. If you guys are interested in very, very detailed stuff, you guys will have to contact me, and then we can work on things together on like a one-on-one session or something like this. But once you see kind of that brief little wicks past a move or a pivot low after it's shown weakness, this is really just telling us that that was a stop hunt, essentially showing that the market makers that we can then move it up in the other direction here. So another example, quickly, you can see a bunch of lows here, right? And the more lows, the more important it is. So now we see on the euro that there's just little bits of moves just past that. So this is the only situation that I want you guys to completely not trade and say there's not a chance that I will take that trade, because what we're seeing right now is we want to follow the trend, like I said, but we're seeing possible chances of a massive reversal here. And you can see that here, and you can see that here. Now, where else does that happen? You can kind of see it a previous supply area here, where that's not a great example, but you're seeing the wicks and then it's coming back down with a lot of momentum in the other direction. Another example, we're wicking above something and then coming back in that direction, and we're closing back within. Hopefully this is kind of obvious to you guys. You're gonna have to play around with it a little bit. And now this is kind of a good example in the opposite side, where we're actually seeing it into our favor, because this is, I would say, arguably an uptrend here, right? You're coming up here, and then you're seeing these lows, and then it's actually wicking in the direction that you want. Does that make sense to you guys here, right? We're in an uptrend, and we've just faked to the downside, and now we're seeing a direction in the uptrend, in the actual direction that we want to continue in. So that's actually going to make it even more likely for you guys, but don't consider that too much, because we're not going to be trying to bet more just because we see added proof in this particular strategy. That's for something a little bit more complicated, where we want to add risk, and we don't really want to do that in somewhat of a beginner strategy here. Now, the next thing that you guys are going to want to do here is, if you're looking at the London session, the thing to know about the London session is it often picks the trend of the day. So the New York session will often follow. This is quite obvious. When you look at the past, you see London session here. By the way, guys, if you want this London session, New York session, I have a bunch of indicators here. I don't use them. I just only have my sessions, London, New York, Asia. That's this one. And then I have Monday's range that tells me what day Monday is. That's all the indicators I use. You guys can use those too. So if you guys want to know the sessions there, throw those up on your chart, and that's going to help you a lot. But a lot of the time, you're going to see this is kind of the structure of it. You go into the trend of the day. We're not seeing any like major manipulation or anything. So it's just a nice smooth. And then we start pulling back for the New York Open, right? And then we see some significant movement. That's going to be very, very common in most of the days that you see. Or you see something like, you see the London opening up. It seems like there's a significant move there, and then it starts pulling back for New York, and then New York continues, continues that trend right there, right? And that's basically what we're going to be looking for most of the time. Now, if you're trying to trade in the London session, you're not going to be able to know what trend it is for the most of the day, right? So what you're going to have to do is hopefully follow the higher time frame trend. So what we're going to then look for is a pullback for any significant day to any sort of important untested level, right? That's an untested level here. And notice that we're kind of going just beyond these lows, because that's kind of where a lot of people's stops might be, right? So this is kind of good indication, right? You're gonna have to use a little bit of your own judgment here, because I can't go into super detail right in a small video like this. But if you guys want some more info on things like this, please jump into the streams. I can explain things a lot better in stream with much more time than a quick 10-minute video here for you guys. And honestly, if you guys don't have 10 minutes to watch like a strategy that's just be giving to you guys, you might not be doing super well in Forex in very soon, because I guarantee this is some of the best content that you're going to learn. So then what we're going to be looking for is a rejection off of a previous level, and we're going to be bouncing off with significance, right? So it's going to be very generalized here, and this is not a great example where I can say anything obvious here, but you see it bounces off of it, and then you see significance. That's really all I can unfortunately say about this perfect example of it bouncing off of it, but there's a couple things that kind of line up. The one that you're going to be looking for is bouncing off of a supplier demand zone, some sort of level of importance. Another one is looking for sweeps below levels, so stopping people out of their orders. And the third one is breaking levels to the upside. Now you don't see any levels being broken here until you get way up here, right? If that makes sense, because the previous green candle is the previous level. There wasn't actually really any levels there, right? So what we're going to do is we're going to follow that on the 5-minute, and once we see the significance, then you're going to jump in on the trade, and you're going to put your stop below those lows, and then you're going to follow that trend to the next major level of importance. And now if you guys obviously can't find levels of importance, this is not where this video is going to help you out, but there are other videos I have that can teach you significant levels of importance. Basically, it's going to be breaking down how we're going to be trading the London Open. So you're going to leave that to run, hopefully into the New York Open. If you see something on the New York Open that shows a previous important level, something that we've just actually targeted, that's why we targeted a previous important level, and then you see a significant pullback and just wicking above, you're looking at the higher time frame, you can see the level just barely being broken up. It's still closing above, so I'm not too concerned about this level being faked out. But if you're seeing these wicks on the higher time frame and then the reversal being hard, then we're going to want to get out of that trade as quick as possible. And then we're going to want to be looking for an actual short on the New York Open. But if we don't see those wicks above, then what we're going to be looking for is we're going to be looking for a continuation, some sort of pullback, and the exact same sort of thing again, continuing in to the same way that we just dealt with the London session. So we can see, okay, a significant level was here, right? And then we've bounced off of that one, and we started rallying right off of that. So you could have entered up here, and then you might have gotten stopped out at break even after we got into a little bit of profit, but that's completely up to you. So let's just kind of look at another day here. Essentially what we're going to be doing with the strategy is we're going to be taking 2 trades a day on any one of the, or 2 possible trades a day on all of the US dollar pairs, and you're going to be able to scan through them all and look at them all individually, right? So let's look at this next day here using the euro dollar here, right? So what we wanted to do is we have the upper time frame is on an uptrend. So here we see, okay, it's actually coming into the reverse direction. We can look for a little bit of pullback for maybe a bounce off of a significant level. So a significant level to me might have been this one because it's kind of untested. So this might be a little bit hard for you to see of any major significant levels, but it could have been that one. And then we see the reversal happening right around here, right? And then you can look for an entry and then rally up to previous highs. Now, mind you, we didn't actually get into any previous highs, and what we did see is actually what I just explained that you don't want to see here is just the brief little wicks above on the New York Open and then closes back below. This is showing signs of a reversal on the New York Open because this is very common for the New York session to do if it doesn't continue. And that's where we would just cut the trade completely short. And again, you've just made another trade. And what you can do, if you are so eager, is look for a short now using that exact same method, looking for some sort of pullback and then continuation into the trend, and then targeting significant lows on the previous day, right? So right about here would be a significant low. Hopefully that makes a lot of sense for you guys. And again, if you guys are a little bit confused, make sure you jump in and watch the streams. I stream most weekdays. Some days I do have to take off, but I try my best to teach as well as I can and answer as many questions as possible. Absolutely free of charge for you. If you guys do want to learn on one-on-one mentoring, then that is completely up to you, but that is not included in the streams. So let's just look at another random day back here maybe. So let's see, okay, this is a downtrend. Previous days are a downtrend. What we can see is on the London Open, it did actually start breaking down. And what we would want to look for is a rejection off of some sort of level like this, a important level, because it completely plummeted, right? We're not going to be able to get in right away. We want to look for a rejection off of here, but it didn't really give us a great rejection off of that. It kind of wicked and then just didn't do anything. So it came up again and it completely faked out some people and stopped some people out. This is again another sign that it's actually going to continue down. So once we see that fake out and we want to continue that trend, because we always want to continue the trends, remember that's the most important thing, then we can start targeting. And I'm not going to say that we just hit that perfectly. Let's say that we hit the previous lows as a best case. Best case we hit 3-4R. Looking back here, maybe you were targeting actually you might have been targeting these lows here. You might have actually hit it perfectly here. It's just a little bit odd. We don't know exactly where we're going to be hitting, but I'm just trying to give you kind of a rough idea of what was going to happen here. And then what do we see? Let's say you took some profits. Let's say you moved your stop forward, and now we see, okay, this was a significant low, right? And significant lows here, and now it's really rallying off of it. So we would just exit that right away, and we look for a long on a reversal, right? So that would be your second trade of the day. Let's look for another trade here. In a downtrend, this is the previous day. In a downtrend, it fakes it to the upside, right? We don't want to be going long, and then we see a rejection off of. Let's just draw this on the 15-minute. There might be an important level here. Okay, we actually see the sweeps above, and you can see on the 15-minute how it's just perfectly sweeping above that Asia high, and then we're breaking down, and we can then place our stop above here. And where would we target? Probably these lows right there. So you can see each day you're usually getting out of your trade quite quickly by the next session, right? So in the New York session here, you probably didn't want to trade because it just looked like a big old piece of burning fire. I don't know. It just looked like a dumpster fire, didn't it? You don't really know what to do there. So let's just look once again. If you guys are curious, let's look at this one. It kind of looks kind of cool to me. So this is I would say that this is a downtrend on the higher time frame. Of course. What we're seeing is the London session going to the downside. Then we're looking for some sort of significant rejection. That could have been a rejection off of that. You might have jumped in a little bit early here and then gotten stopped out there. To be fair, you might have gotten stopped out right here. But then you see again, it comes back up, goes up to the previous day's high, and then just barely tops it and then starts breaking down. Now, once again, you see the breakdown. Let's say you jumped in a little bit late over here and we targeted the previous day's lows, right? There you go. And you would have covered your previous day's lows. You might have even got a little bit farther there. You would have covered your loss completely. Perfect. Let's just look at maybe another one here. Why not? London session. We see a little bit fake out to the upside. Maybe you completely missed this. You might have gotten in here, but you want to continue that trend, of course. We would have waited because it would have taken too long here to get us in. We would have waited for a pullback here. You would have completely missed it, I think. And the New York doesn't really look like anything to me either. Once again, this was a uptrend. We were looking at an uptrend, but this time we see a bounce off of here. I don't know if this is anything significant. It could have been. You could have gotten stopped out at break even after it started rallying up a little bit when it came back down here. But you can see after it did break out, you do see that wicking action there. and then we would have closed it immediately no matter what anyways, and then we would have completely gone short as quick as possible, and we would have been targeting the previous day's lows perfectly. That's all you would have been doing. All right, guys, hopefully that was a super simple strategy. It might be a little bit confusing. Please watch the video again, send it around, see if some people can kind of help you, because it's very similar to a lot of stuff I do normally trade. It's just going to be a little bit more fast paced, and you're going to be able to place a lot more trades and hopefully grow your account really, really quickly. And now the thing is, when you are trading like this, I do still recommend that you are risking a very small amount of your capital size. So I do have videos on how to actually manage your risk properly. So please make sure you hit some of those other videos there. You can watch those in detail. And if you do want to learn a bunch more, again, watch the streams and you will learn a ton. There's also, if you guys are interested, Discord in the link in the description, and you guys can actually ask some questions, talk to some people live throughout the day. And there's also a Signal group if you want to join in that as well. See you guys next time.